Let's stay in Nigeria now and head to the fixed income space and see how that's doing. We know that yields are growing, but inflation was out yesterday, very hot, 29.9%. Has that started streaming into investor sentiment in the fixed income space? Or now that we see that the NGX is rebounding, do we have more people coming back here, having more confidence right here? Well, let's speak to Caleb Alimi. Caleb Alimi is a chief dealer at Providus Bank to tell us what's been happening. Hi, Caleb. Good afternoon.
Hi, Ini. Good afternoon.
Yeah, so tell us what's going on in the market now. After inflation numbers yesterday, really hot. We're really heading I think we're just like this away from 30%. What's happening? What's the reaction?
I think it's safe to say we're already at 30% because 29.9 is, 30% as it is. So, you can tell, reality on the streets is that, it's hotter than 29.9%. Demand on the street feels...
Not again. Caleb, can you hear me?
Loud and clear. Can you hear me?
Okay, yes. I lost you for just a bit there. Yeah, go ahead, please.
So I was saying that, the man on the streets feels more than a 30% increase in his pocket as per inflation. The bottle of water I used to buy for a certain price has already changed. The crate of eggs you used to buy at a particular price, is more than 50% up now. So, but on the aggregate, the statisticians are telling us about 30%. So, yes, that is our reality currently.
But we're expecting this. I don't think anyone in Nigeria or anyone talking about Nigerian affairs was expecting it to taper. So I guess investors have already factored this into their decisions before now.
Interestingly, investors have factored it in, but we are already also seeing the regulator now factoring that in. We saw the Treasury bills auction last week. We printed at 19% on the one-year paper. That was a yield of 23%, and that brought us very close to, it reduced the negative real return that we've been experiencing before. Formerly, negative real return used to be double digits, but now it's single digits. Now, so like I said, the regulators are already making those changes. We also expect now there's a bond auction also on Monday, and the regulator is floating about 2.5 trillion. That's a record size. Formerly it takes them like 6 months to a year to raise that kind of money, but they're looking to raise it at one auction. Very, very interesting. So investors are going to come and they're going to demand very high rates, of course.
Yeah. So talking about that bond auction, 2.5 trillion naira. The regulator is becoming so bold coming out there, and what would have thought that perhaps investors will be on the other side?
Well, what I can say is they understand that there's a need to raise interest rates to try and combat inflation. The MPC will be on the 25th and 26th of this month. We expect at least a 200 basis points increase in the benchmark rates to also just show how serious they are about combating inflation. In the banking space, what we've seen is monetary a tight monetary policy stance, from the regulator, from the CBN, and we expect all of these are just showing that they are trying to bring down inflation. Now, offering this type of size at an auction, means that they really need, they're trying to probably attract, the entire public and also possibly foreign portfolio investors to come in and, invest in these securities. I think that, this is going to print somewhere northwards of 18%.
I heard you say foreign portfolio investors. Are they coming in already? I thought we're proudly Nigerian at this point, both for the equities and the fixed income.
We're probably Nigerian, but, we have a sort of like a supply issue when it comes to foreign currency. And we have these FPIs, foreign portfolio investors, who are yield hunters. They'll come for a yield that is above 20%. And we're beginning to see some interest in the NTB space. We think they'll come into the bond market as well.
Well, the danger with those portfolio foreign investors, and then at any news or of uncertainty, they go out and then the market crashes.
Yeah, but the reforms that the CBN, is implementing in the NAFEM market or in the foreign exchange market, they're becoming more orthodox and more liberal. That should give more confidence to the foreign portfolio investors. What they would only be bothered about now is liquidity. But if they come in their drones, if they come in their droves, they come in large sizes, then the issue of liquidity could be solved. And the more we have more players, playing that FX market, liquidity will be taken care of. And then entry and exit of these foreign portfolio investors will become easy. And then, we should see a positive traction in that foreign exchange part.
Talking about CBN's, the circulars and all of that, the updates we've been having for a couple of weeks now. At this rate, I hope it doesn't bring uncertainty in the minds of investors, like there's a direction so we know what to expect, in spite of the fact that we're having it come out in bits.
A lot has happened in the last 9 years at the central bank, and this is the new sheriff in town. He's obviously trying to, set different things in place. So the reforms have to come quick and fast, and they also, have to be patient to see that there's traction to what they're doing, So all of that is going to take time. And so they're taking, one step at a time to correct some of the anomalies that we've been used to, or they're just, taking different actions to ensure that, there's a bit of sanity back to the market. It will take time for all of those things to impact the market, but I think they're on the right path.
All right, Caleb, thank you so much for your time. Chief Dealer with Providence Bank.
Thank you for having me.